Okay, so welcome back. It is currently 29th of December, as you can see in the top corner here, and we are going to break down 2025 as a trading year, full yearly review on my results, my P&L, which quarters went well, which quarters didn't go so well, and the types of trading I was doing, reasons why things didn't go as well. When I started implementing my first initial model compared to, just taking trades off what I'd learned, and also compared to the later months in the year. I think literally this month it's sort of been a bit more testing out different things with AI and, looking at different strategies. Something that works a little bit better for my psychology and for me. And we're going to go over the positives we can take away from this year and the learning points / the negatives, and also how I'm going to approach 2026 compared to this year. And so we're going to get into just a general summary. So for the year, I'm down £1,976, and the account is currently sat about 6.3k balance. My best quarter was Q4, and my worst quarter was Q3. So to start with, I'm going to go to Q1, and this was when the account was much smaller. So I was very much 1% risk trading, and we're going to go onto my channel as well, and just we're going to get, where is it, view channel, pause that, pop this like this so you can see again, and we're going to go to my videos, and we're just going to use this to briefly overlay where we are pretty much. So 9 months ago, it wasn't until March where I had started video recording. So the first quarter was pretty much me just journaling on my phone, taking screenshots and whatnot. Small 1% risk trades. And so you can see here, I pretty much traded exclusively NASDAQ and S&P all year. And you can see here, they're quite small losses, £35, £46, with the occasional profit. And we were down £326 that quarter. So, for a first quarter live, properly trading, it's expected to lose money, and the size of my account at the time, I started with £3,000. So 1% of that is 30 quid. It's just one of those. So this quarter, we can kind of take this down to being, just sort of getting used to it. And you can see I started off on a big losing streak here. 1, 2, 3, 4, 5, 6, 7 trade losing streak before we finally made some profits in the market. And then once that happened, another losing streak. And then we sort of got the hang of it a little bit more. Another small flurry of losses. And so on, all the way to the end of March. So, Q1 was, like I say, sort of like a testing stage. This whole year's been testing, really. And then gradually throughout the middle of the year, Q2, Q3, this is when the account size was bumped up a little bit. So then having to adapt to, new psychology, actual capital being risked, and just seeing how that has affected my psychology and how I execute trades is interesting. Like you can see the losses did bump up quite significantly. So for Q2 and Q3, 761, 785. So let's just say 900 plus 760s, what, 1660. around that. So we lost like 1.6K over those 2 quarters. And then, yeah, we add the extra 326 at the start, and that's the 1K, 1.9, sorry, that brings us here. So in terms of this, in Q2, so what was this? This was April to June. So that would be what we now, December, so around 6 months ago. So all of that, this was around the time where, you know, I was still on these sorts of charts, still just taking sort of random entries. And this was where I was initially developing this new strategy. As you can see, this backtesting video here is kind of like a signal for it. I went through like a period of a few weeks of really just collecting some data on this, maybe about a month worth, where I collected like a year of backtested data using FX Replay. And since doing this is when the chart colors switched over. And yeah, you can see here, broke my rules, 3 trades. And then from this this day here, this was when I remember it being one of those days where I was like, right, I'm not going to allow that to be the case. And from there, I started really like implementing this strategy. Granted, I believe I definitely had a couple days where the rules were broken, just bad psychology days, and we had some good psychology days. So we did get, I think in Q2, we did get a couple nice winners. So you can see like the losses are ramped up a little bit. But yeah, this quarter was pretty much, so we'll do, if I can type here, we'll just say like what, Q1 summary. Adapting to live markets, random trades, no video journals until March, screenshots and phone journaling. Okay, so I'm not sure. See, this is the thing. On Mac, I don't really know how to use this. Like with Excel, I'm all over it. But with this, I don't really know how to wrap stuff. Like, I guess we can just sort of extend this a little bit. And then we'll just sort of go down through here. So Q2 summary, capital increased, video journals consistent, IFVG model backtesting took place and model implemented more consistently, larger losses, adapting to new risk psychology. Did I spell psychology right there? Psychology, yeah, cool. So we'll just extend this out a little bit, actually. We'll just do it like this. Right, so it's a bit of a messy table, but it's for my data, so it's all good. Q3 summary. Oh. Okay, so that's Q1, Q2, and then Q3. This was where, you know, I had a bit of a spiral where I said I wasn't going to trade during my holiday in Thailand, and you know, I still found myself taking trades during that time, you know, around this like late September. Yeah, it was late. No, it wasn't. It was early September that I was there up until about the 20th. And then when I came back, you can see here that I just went on this big loss streak. I think that carried through into Q4 as well. No, so we started off Q4 with a nice win. But yeah, I can remember this loss streak after coming back from Thailand. And, obviously after 3 weeks of drinking, enjoying yourself, being on holiday, different time zones and such, the psychology was just skewed completely for a good while. And, I'd spent quite a bit of money whilst I was over there. And ultimately that's going to come into play when you're on the charts and in the markets. So it's no wonder that the losses were the largest during this quarter, because of that. And it's a completely transparent, honest reflection of where my mind was at the time. Just chasing capital rather than executing. And I think at this time as well, so if we go to where was this? 177, 28th of August. So it was actually, this is literally, so all of this is whilst I was away up to around here, around the 24th. And then we had 1, 2, 3, 4 losers towards the end of September there. And yeah, that is kind of the reflection of that quarter with the increased capital in the account. So what we'll do is Thailand trip, lots of money spent on holiday, general psychology, skewed, taking trades whilst away, chasing profits upon return, and further risk psychology, adaption. So that is Q3, and then Q4 summary. We'll do that. Pop that down again. So yeah, Q4 was much better, much better. You can see here a bit more consistent profits. There were losses, but they were in line with my risk profile. This would have been, anywhere between 2% to 3% risk per trade. Little trades like this here, you can see where I've taken partials. And yeah, overall, this is a much healthier P&L for the month, the quarter even. Granted, it was ending in £14.86, and it was around, so let's just go up here. First trade 2 weeks ago, so that would have been what we are now, 29 minus 14. And then we'll just put something like, testing out AI, new strategies, inconsistent trades. Put that one in black. Where are we going? Color in black. And yeah, so again, we can copy and paste that as well. Overall, healthier risk management, more consistency in the first half of the quarter, and then final 2 weeks drop off as testing out AI and looking for new strategies, plus holiday season, end of year. So that is pretty much the main bits for each quarter. And then what we'll do here is add a couple more lines. Pros. Can't make my mind up here. And then we'll just do something like, you know, didn't blow the account, which is good. You know, that's a good start. Didn't blow the account over the whole year, and full year of live price action, journaled and experienced. We can also have no major spirals as well, so that was a bonus. And what else can we do? Consistency proven during a period of good execution using the IFVG model. If you haven't seen my other videos, the IFVG model is, you know, sweep at a previous daily high or low, and then we get an inverse fair value gap below or above that level, followed by a market structure shift, and then from that market structure shift we get a fair value gap created, and we enter on the retracement into that fair value gap with the stop below or above the inverse fair value gap, depending on if I'm long or short in the market, to then target the opposite liquidity, e.g. the other previous daily high or low, depending if I'm long or short. And then we can add in learning points, put that in bold. No model, no entry. Overtrading equals chasing equals gambling equals losses. Okay, so from here, what other learning points do we have throughout the year? I did at one point have like a copy trader going on. I was copying someone else's trades in a different account. So I learned, you know, copy trading, direct copy trading is not sustainable. Further to that, what else? Let's have a think. So, you know, didn't blow the account, full year live price action journaled and experienced no major spirals, consistently proven, And then we could do, if we can insert another one here, that would be great. Add row above. Final quarter in profit after 3 losing quarters. Learning points. You know, I think this kind of covers most of it. Overtrading equals chasing equals gambling equals losses. Trades that don't fully match the model can lead to unnecessary portfolio bleeding equals negative impact on P&L. So, you know, it's quite a simple summary. Obviously, it took me quite a while to put this spreadsheet together, just because I can only print off one quarter at a time um, from my broker statement. And yeah, we could also talk about, the difference between live results and backtesting results. The main one being, when backtesting is a completely different market that you're trading in, because you're not in live markets, you're not using real funds, and that ultimately will affect your psychology when you go back into the markets and your executions. With backtesting, I'm able to skip through multiple days in one go or within like a matter of minutes. So that was firstly what I struggled with. Getting used to the fact that when I was backtesting my inverse fair value gap model, it'd be maybe like one trade a week, sometimes one trade every 2 weeks. And dealing with that in real life, when you're in the live markets and you're looking at the charts every day, it makes it a bit more difficult at first, at least. Well, even now, it makes it a bit more difficult because you think you see a trade and then only in hindsight, you sort of realize that, maybe that wasn't the best day to trade. Maybe that wasn't the right entry criteria. Maybe, you could have waited a bit more for more confirmation, or managed to trade differently, or, any number of things. So, whereas with backtesting, you're trading purely the model because there's no emotional involvement in it and it's way easier to do. So, I suppose going off that, take backtesting results into consideration, and for the worst, when going into live markets, as real capital affects your executional psychology. And yeah, I think that's the main bits for the year. Let's take this out a sec. And I think going into next year, I am still backtesting this new strategy, this 8 to 8:15 candle strategy, with a retrace and continuation or reversal, depending on how it is. So I need to collect some more data on that just to see how well that works. But yeah, you can see the curve here. You can see the curve. So it gradually gets worse and worse and worse until, I have dealt with the pain of, well, how many trades is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades lost in a row. That alone is £1,139 losing streak. And when you lose that in real capital, it makes you question, one, are you built for this? Are you dedicated enough? How long is this going to go on for? Am I doing something wrong? And, once you sort of go through that and you make the decision to be like, right, I am going to do this and it is happening. How can I improve it? What am I doing wrong? What are, external factors like around me in my day-to-day looking like at the moment that could be, leaking into my performance in the markets? How can I execute my trades better? And just developing more awareness and growing as a trader. To the point where, we started off, I remember this trade was so satisfying. after 10 losing trades and seeing this one run, hit, take profit, so satisfying. It just gave me that, that like extra confidence in the model at the time. Granted, we did go and pretty much lose that straight away to then go make another 300 on top of that. So yeah, it's one of those, it's lots of ups and downs just looking at the numbers here. We did go on quite a nice run towards the middle, well, yeah, through November. I think we were up like 400 on something, 449 in November. So that was a good month. I was just getting into the role of the model pretty much. So I think it must have been somewhere along along the lines there where had a couple closed early trades, and I was a bit uncomfortable with the model and the time that I was holding trades for. I work a 9 to 5 job. I'm at a desk. I can only look at the charts so much. And when you're holding a trade for that amount of time and you're also trying to work, it makes it very difficult to focus on both things at the same time. So that is what then caused me to reconsider, maybe try some other things. And as you can see, that point here as well, the inconsistency in the trades I was taking, testing out AI, like I didn't really know. And then these two trades here were just clumsy. Like I went in testing out a brand new model, no prior back testing, anything. I just went in blind trading it. I didn't know what I was looking for. I just had an inclination of like a pattern to go from. And you can see I got burnt straight off that. So at that point, I realized things were spiraling and I just called it for the year. Had it not been that close to the end of the year, maybe I wouldn't have done that and we could have seen further losses. But, overall, I'm not mad about this. This is real transparent information. This is my first year in live markets. And yeah, when you come into doing trading, you got to expect to lose money at first. You got to lose it to make it, and learn the lessons. And, after a full year of properly doing this, journaling, everything, you've seen the whole journey. You can go back onto my channel and just see, like, this is a whole year of trading, all the way up to, Christmas Day where I was doing some more back testing. So overall, I'm happy with it. It could have been better. It could have been worse. That's the thing. So going into 2026, I think we'll just take all of this, holiday psychology. I'll make note not to bloody trade when I'm on holiday next time because it does mess with you. And I knew it was going to happen, but at the same time, I did think, well, maybe it won't. Maybe I'll be fine. And this was just like taking trades, one, when I shouldn't have, taking them on my phone, not properly reviewing the markets. And yeah. So going into 2026, I think this kind of covers it, to be honest. It does kind of cover it. Like, this is what I'm looking at going into 2026. My main struggle is going to be, I might take a bit more time out just so I can backtest this new model a bit more, to develop some more confidence in it. So I wouldn't be surprised if, near the beginning of the year, see like a sharp spike in profits and then maybe a little dip. But then again, there's also all the fundamentals going into the markets. Are we going to see a drop at the start of the year overall in the markets if we're expecting another bullish year? You look at like a yearly candle, you're going to see a drop at the start of the year, maybe see the lows in February time, before, quite a big run up into Q2 to Q3. And yeah, so that is my day trading results. And it's been a long year. It's also been a quick year. But I can also cover my eToro as well. We can do that if you just go here. So put this up here. So in the grand scheme of things, eToro has been quite nice this year. This is just my general investment portfolio. You can see I started in 2021, risky trades, minor, like out of the 5 months that I traded, 3 of them red. 2022, out of the 12 months, only 3 of them green. 2023, bit better. 2024, lower returns, but more consistent returns. And then this year, I'm not going to put this all down on me. Like it is, I have been investing better, making better decisions when to close positions, managing and rotating my profits into more, suitable options for me. But yeah, you can just see the story here. Like we had the massive crash in April time. That's when the market bottomed, and then since then it's just gone on a massive rally. We had the pullback in November with all the China tariffs and everything, and then this month has been a bit more choppy, which is expected being December. You think again of the yearly candle. It's the final monthly candle of the year. It's going to be a bit more of consolidation compared to months where you're expecting expansion in the markets. So yeah, you can see here 2024, 2022, typically red months. We had a massive green month in 2023. But yeah, like I say, obviously my psychology and my decision making is improved over the years, but by no means is this all up to me. We've had a very bullish year, and markets just have been quite nice and favorable. But yeah, it's just one of those. So I think that's gonna about do it for me for now. And yeah, like I say, Q4 been definitely better. And maybe next year we'll look back and we'll compare this spreadsheet with the 2026 spreadsheet. We'll see if the P&L is better, see what we've further learned, see where we are, because ultimately it's been a lot of learning this year. It's been a lot of losses, and a lot of new things to take on board. So yeah, I think that's about everything I wanted to cover. And with that, I will catch you in a bit. Have a happy new year and all the best.